Hello everyone, Leonard Ulrich here with a second video in 2 days because a lot is happening. A lot of you in the comments section below in my previous video yesterday are asking, Leonard, what's up? The stock market rallied and everything's fine now, right? The answer is no. This is not all right. This is a sucker's rally. What you're seeing before you is a chart of the Dow for 1 day today. And this chart is incredible because I've never seen a 1800 intraday chart in the Dow before. And there's a reason why the Dow just kept on going downwards as it has for the past 3 months, and then suddenly reversed 1,000 points. And the reason for that is because pension funds needed to buy stocks in the last few trading days of the year. One of the sources that I watch or refer to is Hedge, and you have to take their articles with a grain of salt because they tend to be written by perma bears. Regardless, what they say is about 90% accurate. So in an article entitled Brace for Seismic Volatility, Pensions to Buy Record $60 billion in Stocks in Coming Days, we read this. Finally, some good news for the bulls. After years in which pension funds had to rebalance at the end of every quarter by selling stocks to buy bonds due to the chronic relative outperformance of the former and the need to keep portfolios balanced, in Q4, returns have been flipped on their head, with stocks suffering their worst quarter since the 2008 financial crisis, while bonds are sharply higher. Which also means that, as Wells Fargo calculates, the U.S. defined benefit pensions will need to implement a, quote, giant rebalancing out of bonds and into stocks, end of quote, with the bank estimating roughly $64 billion in equity, meaning stock, purchases over the next 6 trading days. So there you have it. And for those of you who are keen, this article was written on December 21st, just a few days ago. So what you are seeing is a stock market being bounced back up by the need on behalf of pension funds to buy in the stock market. Now, has anything fundamentally changed since the video I released yesterday? No, not at all. In fact, here's another tidbit for you. Global debt ballooned 40% in decade after financial crisis. The world global debt situation has only increased because money is debt. That is the illusion of money ever since August 15th, 1971, when America, under Richard Nixon, separated their currency from the gold standard. And as a matter of fact, yesterday's video started out with perhaps the most important chart in the video, which is the smart money flow indicator. These are the pools of cash which tend to get into the market early and out of the market early, while 90% of the people suffer losses all the way down, and don't get into the market until it's too late. All the smart money is out of the Dow, as you can see. And what you are seeing in this dead cat bounce, if you will, in this sucker's rally, is risk being transferred from the 1% of the 1% to the people. And when pension funds fail, the governments of the world are going to face a tough decision. Do they honor the pension funds and bail them out, increasing national debt? Or do they say, I'm sorry, we just don't have enough to pay people's pensions, to keep the water running, to keep the power running in countries or areas where these utilities are a provincial or state or national owned utility? I think governments are going to keep the power on, keep the water on, etc. Nothing has changed since yesterday. This is a sucker's rally. Don't buy into it. Stay the course.